It seems to be some trouble in paradise when it comes to having institutions into crypto, primarily Bitcoin. And on top of that, we are also dealing with AI. A lot of people are not on X, and on X is where we see a lot of information regarding AI. And it's taken over, and it has taken over fast. It's something that we've kind of talked about and touched on the show for a while. And it does really impose threats to Bitcoin quantum wise. And it imposes, it's kind of impacted the crypto markets. So, from what we're currently seeing, because what we're currently seeing is nowhere where we thought we would be. So, we're going to go ahead and talk a little bit about what's happening over at BlackRock in regards to Bitcoin. We're going to talk a little bit about AI. We've got some Ripple XRP stories, and the storm is almost over because we're almost in we're almost in March, and we're supposed to have some sort of crypto market clarity update. We got Patrick Wick over at the White House, one of the White House advisors, saying that, trillions and trillions and trillions are waiting to flood from the institutions into crypto, which I definitely believe that that's happening. But more importantly, we're just kind of like, what's going on? With the market. It's not fun. It's not sexy. It's really just it's just being absorbed by AI. And I know that you guys are not interested in AI. You guys are interested in crypto. You're interested in when your bags are going to pump. But it's important to pay attention to relevant pieces of information that are going to impact crypto. The reason why we talk about AI so heavily on this channel, well, not super heavily, but more than we did in the past, is because AI agents are here, and they are going to be able to do tasks for you. They're going to be able to essentially do jobs for you, and the currency of their choice is going to be crypto. And it's going to be crypto because it's all code. It's a database, public ledger, kind of similar to AI. AI is all code. So these two mesh together perfectly. And it's one of the sectors that we've been talking about for a while. So we're going to go ahead and cover it. I'm going to continue to post up AI updates so you guys at least have an idea of what's happening. The only social media platform I know that you can get a glimpse into to people that are actually building with AI is going to be X. And also you're going to see how that segues into crypto, because there's a lot of crypto people now talking about AI. And the reason why we're all talking about it and following this trend is because that's where the money is going to come from AI with stable coins and a lot of the different chains and whatnot. So let's go ahead and get into it. Welcome back to the O Show, everything crypto every day. I'm WendyO. Make sure to like, comment, subscribe, and of course set alerts. I know we have many new subscribers and channel members. So I'm going to give a shout out to you guys. Also, the sound is going to be a little bit wonky in here for a while because I'm going to be painting and we're going to be moving the office around. So I don't have the sound the barrier that I used to have over that window. So the sound's going to bounce a little bit, and don't worry, it's all going to work out. Hopefully we're going to get started next week, but it started raining. So we'll see how it goes. But anyways, let's give a shout out to channel members. Let's get into it. Thank you so much to Lawrence for the $30 super chat. I appreciate it. Lo and we are going to be cooking at home today. We're going to be making some beans. And I've got those ready. I soaked them last night. Got the bacon out, the garlic, the onion, all my stuff I need. I'm going to make some refried beans in a little bit. And I had my sweet yam this morning. I'm going to start having that for breakfast after my workouts because it helps a bit. It helps a bit give me some of the energy. But anyways, shout out to Lawrence. Shout out to Dale. Shout out to Mr. Mike, to Mr. John Germain, one of my oldies but goodies, Mr. R. Who else? Yeah, let's go ahead. I'm going to be remodeling the office. And it's not like a big remodel. All it is I'm just putting the desk in on that end, because the natural light's going to help with the lighting in this room. And also, the reason why I had my desk this way facing the door is because I have she was a lot smaller then. So I needed to be able to see and hear her. But, she's off to school. She's off in all her activities. And she raced this weekend with her dad. She did pretty well. I'm not a big fan of that. And we'll get into that later another day. But yeah, we're just going to be moving around. I'm going to be painting the office. You guys will see. But anyways, let's get into news. I've been talking too much. So let's talk about BlackRock, what they've got going on, okay? So BlackRock digital assets head, leverage-driven volatility threatens a Bitcoin narrative. And he just warns that excessive leverage in crypto derivatives is increasing Bitcoin volatility. Yeah, we know, okay? Anytime we have extreme longs or shorts, or anytime we have extreme liquidation or any of that, it causes more volatility. It causes more volatility in every single market. This is not exclusive to crypto. He goes on to say that heavy liquidations and auto deleveraging causes sharp price swings, sometimes on minor news. He said Bitcoin's core fundamentals as a scarce decentralized asset remain strong. Short-term trading is starting to look like a levered NASDAQ. And he said this could scare off conservative institutional investors and push back on claims that ETFs are driving volatility. He pointed that perp platforms is the main source of instability. So basically, he is saying that the volatility we are seeing in crypto doesn't have to do with the ETFs and doesn't have to do with the options or doesn't have to do with traditional finance, but it has to do with leverage and the stuff that's happening in crypto. And this is 100% BS. It's 100% BS for many reasons. Yes, crypto does play a role in the volatility. Our centralized exchanges, or even the decentralized exchanges, anyone that's using leverage, okay? But now we have TradFi that's coming into the markets with an absurd amount of capital. And I say this, I give you guys this stat because it's a very easy one to look up. Gold and silver have a combined market cap of $41 trillion. Bitcoin and crypto have a combined market cap of under $3 trillion, all right? The stock market and all these other assets are worth trillions and trillions and trillions and trillions and trillions and trillions and trillions, okay? So we also talked about what Arthur Hayes said about how a lot of this had to do with options, because options and expiry dates and, just the different things that they're doing in TradFi, because with TradFi, you can take out derivatives on derivatives on derivatives on derivatives, take out all these IOUs, which is crypto is very minuscule compared to that. So they're just trying to save their behinds. Institutional investors are coming, especially the ones that like risk, and especially the ones with a lot of capital. So we will continue to see Bitcoin as a volatile asset for quite some time. I do think we will hit $1 million Bitcoin, but again, that is going to take some time. And I think it will be in the next 10 years. Now, to kind of move forward, Cathie Wood, she says that Bitcoin is a solution for incoming AI deflation chaos. AI is just a hot mess right now. There's a lot happening in a short period of time. Now, she warns that AI-driven productivity gains could trigger rapid deflation and economic disruption. She's right. She says deflation is dangerous in a debt-heavy economy like the U.S. because falling prices make debt harder to repay, and argues traditional systems are unprepared for this productivity shock. She also calls Bitcoin as a hedge against inflation and deflation due to its fixed supply and decentralization, and believes that Bitcoin can protect capital from instability caused by AI economic shifts. Now, while we're talking about AI economic shifts, I want to show you this piece of information. Now, the U.S. jobs numbers that came out, they were revised down to a negative 1 million jobs in 2025, and this was the largest annual revision in the last 20 years. Follows downward revisions of 1,818,000 in 2024, 306,000 in 2023, and in total, 2.1 million jobs have been revised out of initially reported data over the last 3 years. Now, why are we talking about this? Well, let me just compare it really quick. 2009 and 2010 combined downward revisions were roughly 1.2 million. Now we're talking about 2.5 million, so it's more than doubled. And back in that time in 2009 and 2010, that's when we had the Great Recession, when people were losing their homes, their livelihoods, everything. That was a terrible time. I remember how bad that is, and I've been telling you guys for years now. This feels like we are in a recession. This doesn't feel good. I don't like it. I'm not comfortable with it. And, because of all the economists, their definitions and their fancy smancy things, people are like, you're wrong. Well, these are the numbers that are coming out. And to go back to what Cathie Wood said, she's talking about AI. Now, AI is causing a lot of instability. There's people from all over the spectrum that are like, we're going to get an AI, we're going to lay people off, we're going to do all these things. Part of the layoffs are due to AI, and part of them are due to just the instability of the U.S. economy and what's happening. These companies are not capable of paying wages for people to actually have a decent quality of life. Things are becoming so expensive to do business in places like New York and LA. Forget it. It is next to impossible to do anything in LA or California. It's just so freaking expensive, like, to run a business. If I actually look at, if I do a breakdown of my taxes and my overhead and everything that I have to pay, I'm probably only bringing in like 35% like of what I actually make, because I've got overhead costs. I have to pay about half to taxes. I've got, I've got different things that I have to pay for salaries and things like that. And again, it's incredibly hard, and I'm blessed because I get to work from home. So I don't really, my house is paid off, but it's rough out there. And AI will be capable of taking a lot of white collar jobs, but at the same time, and eventually there will be robots, but at the same time, AI is also a tool for you to use so that you can continue to earn, but you're going to have to figure it out. And also, some of the startup costs for AI are pretty expensive. But one of the things that we're seeing happen with AI is that there are social media platforms that are using AI and they're not working properly. So there does need to be a human on the other end to be able to manage all the inbound. But a lot of these companies with the corporate capitalism, they're so greedy, it's not going to happen. So we're going to have a very interesting shift in America. We definitely are, because things are just not. AI is moving rapidly. It's moving really fast. And yes, Bitcoin is a great hedge against it, but it's not the end all be all. I don't know what's going to happen in America, but that's essentially what we're seeing happen. As far as the market goes, we are seeing us operate in a 4-year cycle for the most part. Shout out to Logan for the 199 super chat, and aloha Jay. So anyways, let's get on. There's more stories, but I wanted to share that with you. So I don't know. It feels like we definitely are in a recession. There's just a lot of insanity happening all over the place. Now I want to talk about the digital chamber. So they release principles to help illuminate the path forward on the stablecoin yield debate, so the U.S. can move forward. All right. So basically, in this article, or this document that they release, and again, they're also they are also going to be working with alongside the banks and the government and the crypto people to help pass positive regulation, because again, Patrick Wood is like, hey, we need the Clarity Act so that the SEC and CFTC can figure out what we need to do, and so that we can have capital start coming into crypto and people can build. Now, the Digital Chamber is a nonprofit trade association which advocates for blockchain and crypto by educating policymakers, shaping regulation, and promoting industry growth. I've had a call with them. Wonderful people. My only gripe is I wish they stood up more for retail. Retail is incredibly important, and we don't get enough representation. Now, they emphasize that firms must disclose any yield is not interest to prevent regulatory evasion, and the group support a 2-year deposit impact study to evaluate stablecoin activity on traditional bank deposits. The goal is to preserve the dollar dominance in digital finance, protect DeFi liquidity, and advance durable market structure legislation. Now, I like this idea, and I do have an issue with it. So the group supporting a 2-year deposit impact study to evaluate stablecoin activity in traditional bank deposits. Okay, this would be good if we had more time. This would be good if the Democrats were also pro-crypto, just as this current administration is, and it's not. It's not, because there's a lot of Democrats that don't like crypto and they don't want you to get yield on stablecoins. And I hear what their concerns are, I hear what their gripes are, but I respectfully disagree. The thing about the US dollar is they can print that thing into oblivion. They can. And the current practices right now with accredited investors versus retail, that's not okay. So I do like what the Digital Chamber of Commerce is saying, that they're going to that they want to have 2 years to study how it's going to impact deposits. I don't think 2 years is going to be long enough for them to study it, because again, most people, most Americans, most hardworking middle class, lower middle class, even upper middle class, because times are so hard right now. And I'm just going to say middle class for lower and upper moving forward, because it's all the same thing. It really, really is. You're either rich, middle class, or you're poor. Now, I don't think most people are going to want to remove their money and put it on a Coinbase or a Kraken or a Crypto.com. I don't think that they're going to do that, which, by the way, we are partnered with OG Markets, which is part of Crypto.com. So if you like prediction markets, check out OG Markets. And I don't think people are going to remove their money. I don't think they're going to. What I think they are going to do is that if the banks offer yield on stable coins, they will stay there. And I think it's actually very idiotic for the banks to not want the yield on stable coins to go through, have their own stable coin, and provide yield and use DeFi protocol so they can essentially absorb that. And I'm telling you right now, most people are not going to want to switch their banks to a crypto exchange at all or move their money. Crypto people will, people that are tech savvy will, but not the general population, because it's too much. It's just we don't have time for it. If I wasn't as deep as I am in crypto, I wouldn't. Now, with that being said, 2 years is not enough time to look at the study, and 2 years might be 2 years too late. So what I would like to see is the banks just get behind yield on stablecoins, admit that it's happening, and then offer that to their clients. So they keep their business. This is the bank's one opportunity. It's their one opportunity to compete with crypto. And instead of assimilating, they're refusing, which is stupid on their part. It really, really is. But why would they want to? Why would they want to change their grift? They make way, way, way too much money. Now, back to AI a little bit. We have the first known case of an AI agent independently using Bitcoin to transact, and this is in regards to OpenClaw. All right, this is really interesting stuff, and this is what I'm telling you. Pay attention to AI. So the AI agents are self-replicating and improving code, and they're handling disputes via autonomous AI juries using USDC. AI capabilities are accelerating rapidly, and agents are outperforming nearly all humans in coding science and problem solving. Problem solving, yes. Critical thinking, no. Code creation is now largely automated. And it was really funny because all the crypto bros and the tech guys used to be like, oh, you're stupid. You can't code, blah, blah, blah. Well, it looks like AI has taken their jobs before it's taken a bimbo like mine job. So amen. So basically what's happening is AI is able, you make your own AI agent and they go back and forth. They've got their own juries. They've got their own communities. They've got their own little economy. All right. Their own little ecosystem, but they're dealing with, they're disrupting industries and they're boosting productivity and changing labor and capital dynamics at scale. And they used AI they used Bitcoin to transact. And this is why I think what I see happening in crypto, I see a lot of people have a lot of crypto people have not given up on crypto, but they have shifted to do things in AI, but they're bringing that crypto knowledge with them. And by them bringing their crypto knowledge with them, they're going to figure out how to integrate crypto into AI. And then I think that that's what's going to help the next run. We're going to get really great, dope products and services that are hopefully going to be easy for people like you and me to use, where we can just plug and play and we can have them trade for us. We can have them do DeFi for us. We can have them do tasks and do whatever it is that we need to do. Also, make sure to like, comment, subscribe, set alerts. So I'm telling you right now, the future is going to be AI and crypto just because of the microtransactions. And the cool thing is you're going to be able to be like they're going to make it to be, eventually it's going to evolve where it's going to be plug and play and it's going to be super easy to use. And that's what I see happening. And then that's how the masses are going to really kind of get into this, because it's basically going to be like you download an app on your phone and you say, okay, I want it to do this, 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 this. I want to make a minimum of this much money. I want to transact in XRP on XRPL, and it's going to do it. It's going to plug and play and do it for you. I know it sounds crazy, and I know this might not make sense, which is why we're going to be doing more AI content for you. But I think that that's what the segue is going to be. Now, this one is a weird one. And when you get back to crypto, we got stuff. We got XRP stuff. OpenAI hired Peter Steinberg, the creator of OpenClaw, to bring his agent-focused vision into the firm. OpenClaw is a tool that lets users create AI agents to automate tasks across apps without needing to code. I did a short for you guys yesterday at 2 p.m. PT. Please go back and watch it. Sam Altman emphasized the future will be extremely multi-agent, with AI agents working across apps, not just one chatbot, and compared this to browser tech democratizing the web, suggesting OpenClaw style AI agents can democratize AI tools. So essentially, they're like absorbing OpenClaw, which is scary. That Sam guy scares me a lot. He's very scary. So this is what's happening. Remember, a lot of these companies are being valued at billions and billions of dollars. And you can be a complete dodo like myself, and you can create your own. You can create multiple different things, and maybe someone will acquire what you've built. That's why I tell you to start learning about this stuff now, because AI is not going anywhere. Companies are using it. Robots are being used to help offset costs. Every company is using AI. Every company is. And they will be coming for jobs. They're going to be coming for my jobs. You guys, well, I don't know. I really want to be a fake Wendy, but if you guys want that, I guess. I don't know. I think it's weird. But as far as AI goes, it's coming. So learn how to use it now. Learn how to make money with crypto. Maybe you'll be able to build something really dope. You don't know. but we needed to talk about that. It was a bit important. Now, SBI Holdings shuts down its $10 billion XRP claims, reveals its real Ripple bet. Now, what the hee-haw is this? So SBI Holdings chairman SB1 says that they don't hold 10 billion in XRP. It's a rumor. SBI owns 9% of Ripple Labs, so it's an equity stake. And stake is currently worth around 3.6 billion based on Ripple's $40 billion valuation. Potential upside is bigger if Ripple value grows in line with Brad Garlinghouse $1 trillion vision. I have a video dropping for you about that today, and I highly recommend you watch it because Ripple will probably be one of the first crypto companies to be valued at $1 trillion. So again, they're not invested in XRP, but they're invested in Ripple, which impacts Ripple in a positive manner. Now, this story came out too. It's from FinBold. It says XRP reserves on Binance are collapsing. Now, what does this mean? What's going on with this? So in my personal opinion, well, I'm going to read you guys a little tidbits over here, and then I'll give you my opinion. The type of market we're in, it's kind of standard. So all it's saying is that Binance's XRP reserves fell to 2.5 billion, the lowest since 2024, and it's down from 3.2 billion in November 2024. They state that falling reserves suggest less immediate selling and possible long-term accumulation per the article. I think people are going to make this out to be a bearish thing, but I don't think that I don't want to say the reserves are collapsing. I just think people are probably using self-custody. Maybe they have sold some, and maybe they're just kind of chilling. Because I know the XRP army, a lot of you guys don't take profit. You guys are holding it long term, which is fine. That's your business. But I don't think this is a negative thing. I would actually like to see more data on how much of that money has gone to cold storage wallets that's just sitting there, or XRP. That's what I would want to know. But yeah, to me, it's just not really that big of a thing. Now, this article over here is about XRP ETFs. XRP ETF was one of the more popular ETFs, but it looks like things are slowing down a little bit. So Canary leads with over 410 million, followed by Bitwise and Franklin Templeton, and total net inflows are still above $1.2 billion. But there was a red flow day, which broke the streak that happened in January 7th. It was worse outflow recorded in January 29th. Last week barely ended in a positive 7.65 million. 1-0 flow day and red day will start showing weakened demand. What does this mean? This means that the crypto market sucks right now. It means that everything's down. Again, it's not that bad of a bit. If we were in a bull market and we got this stat, I would be concerned. This is nothing for me to be concerned about. It's really not. We're just not doing great price wise. So there's that. Now, we're going to talk about Chainlink, but I want to do a quick market update for you guys, just to kind of see what's going on. So the market is looking a little bit interesting. It looks like Nexo is coming back to the USA. They weren't able to come back to the US because, it was super predatory, but now they're coming back, so that's a good positive sign. But as far as price action goes, we're still kind of teeter-tottering on the EMA 200. I know we had a nice little move up earlier today. We had a move up all the way to 70,000, and now it looks like we're trying to break down below the EMA 200. And also, if you guys are interested, we are partnered with iTrust. You can merge over your TradFi, your traditional TradFi stuff over to iTrust. They offer trading for precious metals and for crypto, all kinds of stuff. They're incredibly secure, and we're also partnered with them. So we're offering a 100% deposit or little bonus that they've got. And the ref link's going to be down below for that if you're interested. If not, that's fine. But as far as Bitcoin goes right now, we are looking like we're going to break down below 68,000. I want to see us close above 65, but it's not looking likely yet. We'll see what the rest of the day brings. The 4-hour chart is looking like we're still kind of heading downward, so we'll see what happens. But Ethereum, Solana, XRP, everything's pretty much down or just kind of moving sideways. So there's not a lot really to see right now. Now, Chainlink, they went ahead and they put out some adoption, but they announced 12 new integrations across 7 services, including BNB, Ethereum, Polygon, Robinhood, Solana, also the Bank of England. And the CFTC appointed Sergey to the new Innovation Advisory Committee, and Link Futures launched on CME. Brad Garlinghouse is over there as well. Quite a few people. I'm not going to bug you guys with the Bitcoin ETF outflows because the market's not looking super great right now. So we'll skip that for today. This was an article from Crypto Slate. Bitcoin shorts just hit their most extreme level in years as Bitcoin defiantly holds above 70,000. So basically what's happening is people are just kind of moving and grooving all over the place. These are the types of markets where I like to kind of sit on my hands and pay attention to building. Like the way that I build is I continue to create content and expand myself as far as a business and a brand. The way you guys should be thinking right now is that, I mean, however you're able to make money. That's why I'm like, look into AI, please look into AI. It's going to help you a lot. Figure out how you guys can make money. But yeah, we're just kind of chilling. I covered this with you guys yesterday. Now, X is doing something interesting. They are going to be announcing X money. So let's talk about this because this is going to be important. So they've got Smart Cashtags. So Mr. Nicky says X will launch in-app trading in a few weeks. By the way, they're suppressing crypto content again, just like TikTok. So the best places to get crypto content are YouTube and Meta, unfortunately. So Smart Cashtags will let users trade stocks and crypto directly from the timeline, but X is not handling execution or acting as a brokerage. It's only building the financial data, tools, and links. All right. Now, we did that. I should have covered this earlier, but basically, Brian Armstrong said retail users on Coinbase have been very resilient in dealing these market conditions. They've been buying the dip, and we've seen a native unit increase for retail across Bitcoin and Ethereum, blah, 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 blah. And all I want to say about this is I knew that retail was still here because I could tell by my numbers and my analytics. People on CryptoX don't seem to think you guys are here. I know you guys are here, primarily the XRP army. But with that being said, Brian still should kind of focus on helping us get the yield on stablecoins. So thank you, Mr. Armstrong. We appreciate that. But even more interesting about it is Mr. Brian is joining World Liberty Finance. He is, which is a very, 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 very interesting move. Where did it go? Where did it go? Oh, where did it go? Sorry, guys. Where did it go? Oh yeah, hold on. Sorry. Here it is over here. Yep, World Liberty Finance posted. He didn't post it. But Brian Armstrong is joining World Liberty Finance. And it looks like he is going to be speaking. Okay, he's not joining it. He's just speaking. That's all. No big deal. No big deal. Looks like he's going to be speaking and doing all the kind of stuff. Not a big fan of World Liberty Finance currently, but hopefully they get stuff figured out. Now, well, you know what? So this was an interesting podcast with CZ and Chamath. But they're talking about privacy. Let's go ahead and listen to the clip together. I got a little bit of time before I got to start making my beans with my baby.
A lot of stuff around free speech. What is the role of privacy in crypto? One of the things that I struggle with, if you ask me, am I a Bitcoin maximalist? I would say no. Even though I was early, I think my biggest issue with it is that there's a lack of fungibility, which I think is problematic to get to mega scale. And then there's a lack of privacy.
I agree.
It's probably the biggest thing that will hold Bitcoin back from being ubiquitous. Where does privacy play as the world evolves, as you see it?
I think privacy plays a very fundamental role in our society. But right now, as you said, I also think that Bitcoin and most cryptocurrencies do not have enough privacy features.
Yeah.
I think when Bitcoin was designed, it was going to be pseudo-anonymous. But the fact is, every transaction on the blockchain can trace. Especially now you have a centralized exchange with KYC.
Exactly.
And if you have it's actually very easy.
And by the way, we go always back to the same argument, which is it always goes back to the corner case of, well, somebody's using this for something illicit. And I say, there are those use cases, but the overwhelming majority is you buy a pack of gum, but tomorrow you may buy, you may want to buy a certain movie or a video game. You may want to buy a cigarette. And it's not for me to judge.
Yeah.
And
shout out to all the cigarette moms out there. And the cowboys that got big furry mustaches that smoke. Yeah.
Dollars are fungible in that sense. There's complete anonymity. We have no idea about what it was used before that I got my hands on it.
Yeah. Well, there are actually real applications where privacy is extremely important. If you book a certain hotel, and people know that hotel address, like blockchain hotel address, the receiving address, they will know that you will be in that hotel.
That's right.
That's a physical security for you.
That's right.
So there are real use cases where privacy is very important. This is why people don't publicize their home addresses online.
That's right.
In many countries, if you review somebody in Japan, if you review somebody's home address, that's illegal, right? So
No, CZ's right. And when I talk about privacy, he is regurgitating the exact thoughts I've got in my mind. So crypto is great for transparency, which is super funny because again, we always have these people that are like, "Oh, it's for illicit finance, it's for bad things." Yeah, you can definitely use it for bad things, but you can literally track it. So there's that. But anyways, you guys, that's all I got for you today. We're just kind of holding on for the day. It's raining in Southern California, so me and Lo, we're gonna make some beans. I'm gonna eat my steak for breakfast, and then we're just gonna chill. I'm gonna make some content for you guys, and yeah, thank you all so much for being here. Got to give a little extra shout out to Mr. Mick Bollinger, to Music J, to Bubba. Shout out to Mr. Bubba. Shout out to Queen. And who else? And again, thank you so much to Lawrence. We're going to go have some fun today. Me and Lo, we're just chilling at home. But anyways, I'm sending y'all love and light. I will be back tomorrow, 10:30 a.m. PT, and then watch the media that I'm putting out about AI. It's going to be important, and you're going to wish you watched it before. Bye, babies.